Some down under deals could be on the horizon as Qantas launches nonstop flights to and from Australia. The airline says that it will start offering direct trips from Sydney to New York and London starting in 2025. Today could be a major turning point for more Amazon workers on Staten Island. Federal Labor Board will tally votes from a second union election. Workers at a different Amazon warehouse had a surprise victory last month. We will keep you updated on this. And U.S. stocks are trending higher today during early morning trading after falling to historic lows Friday. It's been the worst start to a year since 1939 for the S&P 500. April was the worst performance for the Nasdaq since October of 2008 during the financial crisis. And the Dow dropped nearly 5% over the entire month. So for more on this, we want to bring in Mark Hamrick. He's a senior economic analyst for Bankrate. Mark, thank you so much for joining us. Not to mention, we learned last week that the economy shrunk in the first quarter, too. And then as soon as you hear that, people start, floating the R word. Most people have told us to calm down about it. But what's your take on it? Is there a recession looming?
Well, there's always a recession looming. The question is when and what is the cause of it. But I don't think there's one looming at the moment. We did a survey of economists not long ago at Bankrate, and about the chances for a recession over the next 12 to 18 months were put at 1 and 3. It wasn't 100%, it was 33%. And there are a lot of technical factors, as the White House put it, that explain why we had this contraction in the first quarter, which more had to do with things like inventories, the trade balance, less federal spending for defense. We don't think that we're going to have a contraction in the current quarter, but there's always a risk of a recession. And we had one in March and April of 2020, the likes of which we would probably never experience in our lifetimes, being so short and sharp. And we dug our way out of that with the assistance of the Federal Reserve, who, by the way, is going to raise interest rates likely on Wednesday.
So then what needs to happen, if anything, for the market to rebound?
People need to gain more confidence about the economy.
Right.
They need to have the confidence they had before this pullback began. And what they probably really need is resolution of a lot of problems that aren't likely to be resolved right away. Chief among them is inflation. And again, the aggressive Federal Reserve is part of the market's problem because investors are trying to factor in what the Fed will do and the impacts of that, and the fear that the central bank could overdo it with rate hikes and actually cause a recession. They don't want to do that, but they are aware that there are unintended consequences of their actions. The other part is the supply chain disruptions, which continue all around the world. Russia's invasion of Ukraine is another source of that, also another source of inflation, which is not welcome. And of course, China's attempts to get COVID under control, yet another source of the world's economic woes. So we have a lot going on right now. So you could even make an argument that it might be surprising that the market isn't down worse than it is, given everything that's been going on.
Yeah, it's a lot of stuff to sort of to be concerned about. If you are close to retirement, you're probably looking at your 401k and wondering, like, should I hang on for another year, work for another year, another 2 years? If you're trying to pay for a college, you're probably wringing your hands about your investments. I'm wondering if you have any advice for people who are really sort of buckling under the mental health strain when it comes to worrying about the economy, worrying about their own money. Any sort of mental health advice to get through these dips?
Oh, absolutely. And these are important questions. And as you note, we have been looking into the mental health aspects of our money. And it turns out money is toward the top of sources of anxiety for Americans. And it ranks right up there with physical health, as well as world events. So these issues are important, and the old proverbial idea of losing sleep at night over the stock market, that's not something we want to do. So in terms of what people should think about, first of all, ask yourself, why are you investing? In other words, why do you have this exposure to the stock market? And it turns out most people are investing for retirement, and that is truly the long term. And I know that some people might be thinking about, well, what are the implications of for this money because I'm going to need it immediately, I would urge you to think about having the money last the rest of your life, because that's when you're truly going to need it. So it's not that the retirement itself is a destination, but rather that money really needs to ride until you can no longer use it again. That's number one. For short-term investors, this is going to be a difficult time, and this really demonstrates the perils of investing for the short term. So I'm not a fan of short-term investing, by the way. I really think you have to take a long-term approach to the market. But basically, there are a couple of things to look at. Number one is what is your time horizon for the money? Where are your assets allocated? Do you need to make some new asset allocations, perhaps dial down some risk here? And Marie, the most important thing I think I can say is we are really bad as humans at timing the market. It's virtually impossible to do. Warren Buffett doesn't even really try to do it. And so we might think that it's time to get out. Let's just assume for a moment that's right. The problem is knowing when to get back in. And history demonstrates and tells us that we are not very good at being able to know when to get back in and then really get that exposure to the market we need for the long term.
Right. So if you are in the good position to sort of think about it for the long haul, then that's the best way to do it. I, for one, try not to look at my 401k because for that very reason, I'm in it for the long haul. So I don't need to know what's happening day to day. Mark, thank you so much.
Thank you.